An internal document produced by the Reserve Bank has found that Donald Trump's incoming presidency could result in a weaker Australian economy and lower interest rates. Joining me now is business reporter Edward Boyd. Ed, the economic research was released overnight under Freedom of Information laws.
Yeah, this was analysis done internally by the Reserve Bank and presented within the Reserve Bank on the 10th of October. So about a month before we knew the outcome of the US presidential election. It was basically looking at a number of scenarios under what might happen under a potential Harris presidency or a Trump presidency. And they looked at particularly focusing in on Trump because he's the one that's won the election. They've looked at an extreme scenario where tariffs are 60% on goods, the impact that might have on the economy. And then they've looked at a more moderate scenario, which is the one I'll talk about now. We've got a little chart which the RBA produced, which basically shows under the extreme scenario, interest rates, monetary policy would fall, bond yields would fall, the Aussie dollar would drop a lot, and the stock market would fall. But if we look at the moderate scenario, we can see the Aussie dollar is still going to be going down, but the Australian stock market will do pretty well. Basically, the impact of the tariffs, what the RBA conclude is our trade with America is not that big. It's our trade with China. It's the trade with China that's the key thing. And obviously, China's going to be affected by the tariffs. That's going to have an impact on our economy. And it is going to have a bit of an effect potentially as well on monetary policy and rates. So we could potentially see rates down a little bit more, Laura, over the next couple of years, which is good news for people out there with a mortgage or a business loan. Yeah,
OK, is good news. So interest rates lower eventually?
Yes.
But might stay higher for longer in the shorter term. Is that right?
Yeah, that's right. So look, right now, there's no changes to where potentially, with most economists believe rates are going to be falling in May 2025, February or May 2025. That's still on the cards. There's no changes to that because remember, a lot of the policies that President Trump wants to put into place are going to take some time as well to work through the economy. So this is probably stuff that's going to start affecting Australia's economy at the end of 2025 and early 2026 when we're going to really start to see the impact. So it's still a long way off, but the RBA have modelled these things and presented it within the bank, and their conclusion is our economy will be a little bit weaker under a Trump presidency compared to a Harris presidency, which would have been basically the status quo or business as usual.
Yeah, the stock market's stronger though. It closed at an all-time high yesterday. It hit that all-time high when we were on air yesterday. So could it be a new record this morning? Who's leading the charge?
Look, we've seen US stocks surge to their own record high last night. The Dow Jones indices was up a whole 1%. We had a really strong day of trade on the stock market yesterday in Australia. Lots of companies hit their highest level ever. So WiseTech Global, for example, is one of the businesses that was doing really well yesterday. Commonwealth Bank did really well yesterday. Let's have a look at what the ASX 200 is doing right now. So it's just started trade. Okay, it's up 3 points. So it's still in the green, but it's a bit of a flat morning. But look, the expectation is the market could go up in the next couple of hours. We've seen tech stocks do well overnight in America. The tech sector's one to watch. We've also seen iron ore prices lift as well. So we could have some support from the likes of BHP, Rio Tinto and Fortescue Metals as well. So the market basically is trading at all-time highs as we speak. And the only way from here is either up or down.
Yep, it certainly is. That is an absolute guarantee, Ed. So thank you for that. We'll check in with you soon.